In this TradeMiner video, I want to talk about day trading. Now, a lot of people will day trade the markets, especially Forex. Forex is very popular for day trading. Now, I want to show you how this is used in the Forex market for day trading. Now, of course, you can do this in the stock market and in the futures market as well, but I'm going to use the Forex market as an example since most people day trade the Forex market. Now, what I like to do when I day trade the Forex market is I want to have an underlying bias of the overall market itself. I want to know whether the market is going to have a tendency to rise in price during the day or fall in price during the day or during my time frame of trading, because oftentimes I'll trade the Forex market on a 60-minute chart. Therefore, even though it's called day trading, I'm trading over a longer term time frame, generally a week's time frame. And so what I'll do is I'll come in here and I'll come to step one. I'll prospect for trades in the month of, and let's say that we want to look in November, and we want to trades finally, and I'll turn this down pretty low on the Forex market. I'll turn it down to about 75. I'll do both longs and shorts, and then I'll list trades that last at least, and I'll put in here one trading day, and I'll put in here 5 trading days. Okay, so it's a week's time frame. Now this has to be 2 because you can't do just 1. So list trades that last at least 2 trading days, but no more than 5 trading days. And mine at least, and I'm going to go back just about 8 years of history. And I'm going to turn off the remove the same symbol duplicate symbols and the overlapping trade dates. And when I do that, I get myself a nice little list of the different instruments, the different currency pairs. And then I can come down through them and I can find my favorite currency pair. And I can say, oh, here's the here's the British pound and the Swiss franc. And between November 12th and November 14th, 75% of the time over the last 8 years, that's been bearish. Okay, so that tells me during that week, I'm going to be pretty bearish on that market. Now I can come in here and turn up my sort by my winning ratio. There's 100% British pound Australian dollar. So between November 3rd and November 6th, okay, just that short period of time, those 4 days, while I'm day trading 100% of the time over the last 11 years, this British pound Australian dollar has been bearish. So I want to be taking bearish positions during that time frame. Well, so while I'm day trading between November 3rd and November 6th, I'm not going to be taking any large long positions because I know, traditionally speaking, during this time frame, 100% of the time over the last 11 years, between November 3rd and November 6th, the British pound and the Australian dollar has gone down in value. Okay, so that's very important for me to know as a day trader. It gives me my underlying bias. So if I get a buy signal from one of my traditional technical indicators, I may either not take it or take a very tiny position. But if I get a sell signal from one of my traditional indicators during that time frame, I might take a larger position. Okay, so I might load up on it a little bit more because I have the probabilities of this thing, or the likelihood of this thing continuing this overall long-term historical trend is pretty high, right? 100% of the time over the last 11 years, this thing's been bearish during this time frame. So that's how I use TradeMiner when day trading.